Hello, everybody. It's Tortoise Investing coming at you today with another 5 dividend stocks that you can buy and hold forever. All of these are market beaters over the last 10 years, and they have a dividend growth rate of 10% plus. If that excites you, join the 394 that have already done so. Go ahead and hit that subscribe button, that like button, comment down below. Let's try to get this to 400 subs over the weekend. I think that would be awesome. Let's keep growing this thing together. Now, without further ado, let's go ahead and get to it. Everything is for entertainment and educational purposes only, not financial advice. Let's go ahead now. We got United Healthcare Group. We got Pool Corporation, Nike, Kroger, and Prolongus. If you came for those, there you go. If you want a deeper dive, let's go ahead and deeper dive into them. Alrighty, so we got United Healthcare Group. It's one of my favorite overall just healthcare groups in general. Healthcare stocks. I think it is strong, and it's got a strong future ahead of it. Had some recent highs here around 521, now down to 465. Had a recent drop here. They had a good earnings and good revenue, but apparently the surgeries were down. I don't know. I think it was just one of those things where it got overly spooked and it dropped, and it might be a good buying opportunity. So adjusted free cash flow yield is setting at 7.64%. Beautiful. Got a dividend yield of 1.39%, a payout ratio of 30%. Awesome stuff. Got a revenue right here. Revenue growth is at right at 10% over the last 5 years. Free cash flow is increasing at a rate of 15% over the last 5 years. EPS is going up right at 14.5% over the last 5 years. Very nice stats indeed. And over the last 5 years, 15.87% dividend growth. Absolutely love it. Those are some monster dividend growths right there. Now, they do have increasing debt. Their debt's $54 billion. Their EBITDA is $29 billion. Again, I try to look for 3 times. I don't want the debt to be 3 times more than the EBITDA. So this perfectly falls right there in line. They are doing share buybacks, it looks like, slowly but surely over time. So you like to see that as well. And they have a return on capital employed right at 18%. So a lot of great things ticking for his company. If you need a healthcare company in your portfolio, might be something to look at. Do a little bit more research into it. Next up, we got Pool Corporation. This is like the pool company for all your pool needs. They got like a lockdown on that. They have a free adjusted cash flow yield of 5.25%. Let's take a look here. Recent high, 422 down to 357. So it's got a nice little drop in there from January. They got a dividend yield of 1.27%, payout ratio of 23.7%. So absolutely no problems there whatsoever. Revenue's been increasing at a rate of 17.25% over the last 5 years. That free cash flow yield's been increasing at 26.5% over the last 5 years. Beautiful. You love growing free cash flow. It's great. EPS growing at a rate of 32% over the last 5 years. They've got a good spike here as of late. And when it comes to their debt, they got $1.29 billion. Their EBITDA is $1.06 billion. Not a problem. No issues there. Over the last 5 years, dividends been increasing at a rate of 19.57%. People, when the last time you got a raise at your job over 10% that wasn't like a major promotion? Like, dividend stocks is what's up, man. They've been doing share buybacks slowly but surely, which is another thing you just love to see. And the return on capital employed has been in the 30s forever and a day, it seems. So, again, another strong company. I like what I see with the finances there. Again, do your own research and before just diving into anything. But again, I think it's another great compounder. Next up, Nike. We all know Nike. You know Nike. You should know Nike. They had a recent high here. It looks like around 128 down to 112. They have just a free cash flow yield of 1.77%. A little bit on the low side, but that is okay. Dividend yield of 1.27% and a payout ratio of 37.2%. Now take a look at the revenue here. Over the last 5 years, revenue has been going up at a rate of 5.12%. This is the slow but steady climb. Their free cash flow yield, it's kind of like all over the place, but slowly growing. They're still growing their cash flow. EPS has been growing at a rate of 26% over the last 5 years. I think these are messing with that a little bit. So we'll look at the 2-year for that. Again, a slow and steady grower. Nike's been around for a while. They got more cash than debt on hand, which is beautiful. You like to see it. They do have $8 billion in debt, but like I said, $13 billion in cash. No issues there. And the dividend over the last 5 years has been increasing at a rate of 11.2%. So another good little compounder. They've been buying back shares, again, slowly but surely. Share count's going down. And the return on capital employed, they had their 2020 hiccup, but it has been around 20 last 2 years. Might be something they're able to get back in line and growing again. But yeah, Nike, name brand, high quality. You know, everyone knows the swoosh. Next up, we got Kroger. Kroger at a recent high of 50, I believe. And then their their quarter one results came out, and it caused them a dip a little bit. Might be a buying opportunity. They got an adjusted free cash flow yield of 3.17%, dividend yield 2.24%, payout ratio 32.3%. Take a look at that revenue. Revenue's been growing rate of 3.86% over the last 5 years, a slow and steady grower. Their free cash flow is a little bit everywhere, but it is positive and trending in the right direction. EPS, again, kind of like a little bit everywhere, but going up over the last 5 years, 5.7%. Over the last 10 years, 7.2%. They do have some debt. Looks like they've been paying it off. Yeah, they're paying it off from 2022 to now. $11.91 billion in debt. Their EBITDA is $7.7 billion. No issues there again whatsoever. Dividend yield over the last 5 years been increasing over 15.77%. Great, beautiful. Love to see it. Another good compounder. I think it missed with their EPS. They did issue back more shares. They were doing share buybacks, it looks like. And then, I don't know what happened there. They might have done an acquisition or something. They did a buyout of something here lately, didn't they? I can't remember the name of it. I think they did. Return on capital employed. Again, 2020 hiccup at pretty much everything had, but slowly trending up into the right. Kroger, another great dividend company. In my eyes, all my personal opinions. All right, next up, we're going to be ending it with a REIT with Prolongus. It was at a recent high of 134. They got a free cash flow yield of 3.74%. Dividend yield of 2.85%. We don't look at the payout ratio when it comes to these because these are REITs. REITs are taxed differently than normal companies. Make sure to look in the REITs before buying them. Revenue has been increasing at a rate of 17.94% over the last 5 years. Free cash flow has been going up at a rate of 21% over the last 5 years. Nice. Pretty much every REIT in history is going to have a high amount of debt. That is not a problem. Their free cash flow is growing. That's the big thing. Dividend yield's been increasing at a rate of 12.63% over the last 5 years. They had a big hike right there. And yeah, if you need a REIT, if you need a good, reliable one, you can't go wrong with Prolongus. Think that they've got a lockdown on things. They did I think it was last year, they bought out Duke Realty. So they are the big honchos in the warehouses. I think they have warehouses, isn't it? Let's see here. Logistic real estate properties. Yeah. So yeah. If yins have any questions about any of these, let me know down below in the comments. I'd be more than happy to help yins, or just, I love hearing feedback from yins in general. But again, 5 great companies, 5 great compounders, and good dividend growth. Again, none of this financial advice. All this for entertainment and educational purposes only. Hope everyone has a great weekend, and until next time, see yins.